refresh the YouTube window and see if that's really true. It is. Huh. How about that? Well, maybe not. Well, anyway, it says we're streaming live on YouTube, so hopefully you guys can hear it. If not, shoot me a message. Anyway, back to where I was. The email you get an hour before the broadcast start has a link in it. So all you have to do is click the link in the email and it'll automatically log you into our platform. And the benefit there is you will have access to the question box so that you can ask questions and participate in the discussion. It says I got 2 live streams going on YouTube. We don't want that, do we? No. Okay. I think it's working. Alrighty. We got a lot of new visitors today, so sorry for the technical snafu. You'd think after 20 years we'd have it figured out, but sometimes it happens. Now, I just gave you the best way, but there's going to be days you're out of the office, away from your desktop, but you still want to join live. Some days you'll be busy and you can't join live, but you want to get caught up later. Well, go to our YouTube channel, which is easy to remember. youtube.com/CFRN. That's the Christian Financial Radio Network since 2005. We're celebrating our 20th year anniversary. Now that's the Christian Financial Radio Network, but you don't have to remember all that. Just youtube.com/CFRN. Not only do we broadcast live or attempt to broadcast live every trading day on our YouTube channel, actually we're simulcasting. That means we're broadcasting in 2 different places at the same time. But we also archive each and every daily broadcast. Currently, there's over 2,800 daily episodes archived for your educational and viewing pleasure. Now, thanks to the power of YouTube, you can actually see how we've evolved over the years. You can scroll back 6 days, 6 weeks, 6 months, 6 years, even more. Obviously, you're not going to watch them all, nor do you need to, but it's a great resource to have at your fingertips. And it lets you know we've been around a minute or two. youtube.com/CFRN. Now, this is our schedule for each afternoon broadcast. Michael will join us at the top of the hour, give us a recap of what happened in the live training room. Then we'll do some live trading on the TradingView platform. But right now, we're going to dive into our daily devotional, which is where we start each and every daily broadcast. The topic that we're on right now, and we're in day 8 of 10, I believe it is. Our scripture today is Psalm 33:4, and I'm going to share it with you from the NIV translation. For the word of the Lord is right and true. He is faithful in all he does. Again, Psalm 33, verse 4. Do you ever wonder if you're doing the right thing? Or if you're really where God wants you? Or if something more or different or better or bigger is somewhere out there for you? Or maybe you wonder if the cost of your calling is worth the moments you feel like you're missing. So many moments in life feel like we're in a room where all the lights have burned out, and we're stumbling around trying to find a light switch, a candle, or a flashlight to guide our steps. In those moments, trust God. Grab tightly to his outstretched hand and believe he will guide you safely to the next door He has ready for you to step through. The darkness doesn't have to be scary when we can walk with the light of the world. But those questions you're asking yourself are legitimate. Your fears and worries shouldn't cause you shame. If we could all sit down together to talk about our work, our passions, and our faith, I would be surprised if anyone said their life has turned out exactly the way they planned. What would you say to a friend at the table who had those questions? Would you tell them they're right and they should probably just give up? I hope not. We would love them and pray with them. We would encourage them and find ways to tell them what they're doing is good and worthy and valuable. And that if they know in their spirit that this is where God wants them in this season, then it's no mistake. I would tell you how firmly I believe God is in the practice of taking the humble and making it holy. And that obedience, not size, fame, or recognition, is what matters in the impact we make through our kingdom work. God is faithful in all that He does. Where you are, what you're doing, and the people right in front of you whom God has asked you to serve are no mistake. The challenges, the disappointments, and even the failures are no mistake. God will use every piece of our story to illuminate His glory. Let's pray. Heavenly Father, thank you that your word is right and true, and all your works are done in faithfulness. Help us to trust in your promises and walk in the confidence that you are always faithful, even when we're not. It's in Jesus' name we believe and pray. And everybody said, Amen. Amen, and happy Tuesday. Let me give you the numbers from around the world. We'll start here in the U.S. with the cash markets, or the indices as they're called. Currently the Dow is down 113 points. NASDAQ is up 33. S&P 500 is up a point. But the Russell 2000, our man in the street, is up 20 points. And for the Russell, that's almost 1%. In the commodity basket, crude oil is up 51 cents. Gold is down $35. That's a little over 1%. Silver's down 33 cents, trading 36.57 the last. That's a drop of almost 1%. In the Asian markets at the close, the Nikkei posted a gain of 101 points. Shanghai rose 24. The Hang Seng gained 260, which is well over 1%. And in the European markets at the close, FTSE up 47, the DAX up 133, the CAC up 43. So we had a green day in Asia. It was a green day for the UK. But it is a mixed Radio Tuesday here in the US of A. We got three of the major indices in the green, the S&P just barely, and I'm going to show you. Now, fundamentally, stocks want to rise, but technically there's some obstacles in the path. And when we get to the charts, I'll show you exactly what I'm talking about. The Dow is in the red, 113 points, but that's not a lot for the Dow. It just might turn around and follow the rest of the pack But that technical obstacle that I'm going to point out to you when we get to the charts, well, I definitely expect lower prices before the week ends. Now, tomorrow, we do have crude inventories, and we have the Fed minutes at 2 p.m. Eastern. On Thursday, we do have some high-impact news, but Friday, we got nada, and that might be the day we take the big dip. Let's jump to the global news. The U.S. is set to impose a 25% blanket tariff on all imports from Japan and South Korea, effective August 1st, according to an announcement yesterday from President Trump. He also disclosed new rates for 12 other countries, including Malaysia, 25%, Kazakhstan, 25%, South Africa, 30%, Bangladesh, 35%, Laos, 40%, and Myanmar, 40%. The upcoming measures were communicated through formal letters to the country's leaders, which Trump shared on social media. Also yesterday, Trump signed an executive order delaying so-called reciprocal tariffs on dozens of countries from tomorrow to August 1st. I mean, come on, the guy is being more than fair. Tariffs had initially been postponed from April to July, give countries more time to negotiate their agreements. The U.S. has so far reached deals with the U.K. and Vietnam, as well as a preliminary framework with China. The latest trade updates from the White House reflect the administration's broader strategy of pressuring trading partners into new bilateral deals and reducing the U.S. trade deficit. Measles are at the highest level since 1992, before the disease was considered eliminated in 2000. The annual measles tally is 1,277 confirmed cases across 38 states and Washington, D.C. At least 155 people have been hospitalized, and 3 deaths have been confirmed, 2 children in Texas and 1 adult in New Mexico. Now, what did Texas and New Mexico have in common? Think about it. They're on the southern border. So where did these measles suddenly come from? Could it have been the millions of unvetted illegal aliens that entered our country on Biden's watch? Unfettered. Come on, everybody. We're having a party. It's called the USA. We'll give you everything you need. Health care. You want to get a sex change? We'll take care of that. Need a plane ticket? Good to go. Need a little cash in your pocket? We got a card for you. Just stick it in any teller. Now, that's all at the expense of the American taxpayers. And now it's costing us lives from a disease that was considered eliminated. Measles is among the world's most contagious diseases. About 0.2% of measles cases result in death, mainly in children. In 10% of cases, patients experience ear infections that can lead to hearing loss. Measles vaccines are estimated to have saved roughly 94 million lives over the past 50 years. However, vaccination rates have dropped since the COVID-19 pandemic amid skepticism over safety. Spinning the globe, an Australian woman was convicted yesterday of murdering 3 relatives and attempting to murder a 4th using one of the world's deadliest mushrooms. Erin Patterson, a mother of 2 who faces a potential life sentence, hosted her estranged husband's parents, aunt, and uncle for a home-cooked lunch in July of 2023. She served beef Wellington laced with death cap mushrooms, which contain amatoxins that cause organ failure and account for 90% of mushroom poisoning deaths. Her in-laws and husband's aunt died within a week. The uncle survived and testified as one of over 50 witnesses. Prosecutors didn't specify a motive during the 9-week trial, but suggested familial tensions. Evidence included Patterson's search history and death cap mushrooms residue in a food dehydrator she initially denied owning. Testifying in her own defense, Patterson insisted the deaths were an accident. Jurors were sequestered during deliberations last week to avoid outside influence as the trial garnered widespread public attention. There's even a podcast out there. Just go to Apple Podcast or wherever you get your podcast and do a search on death cap mushrooms. You get the full skinny. All right, that's it for global news. Let's go to Wall Street. Fresh trade threats aren't stopping Wall Street strategists from raising their bets on stocks. Goldman Sachs raised its year-end S&P 500 target to 6,600 late yesterday, up from a prior estimate of 6,100, citing deeper Fed rate cuts, lower bond yields, and investors' willingness to look past near-term earning weaknesses. Yeah, I don't know where they come up with the Fed rate cuts. Jerome doesn't seem to be on the bandwagon. Markets and economic observers got set today for another day of Trump trade activity, with a growing question being when long-promised deals would materialize. Trump began the week promising a mix of letters and/or deals, but with only the former in evidence so far after he sent unilateral declarations, 14 countries, that included the threat of, well, I gave you the numbers earlier. China warned President Trump today against restarting trade tensions and said it would hit back at countries that make deals with the U.S. to exclude China from supply chains. Well, go ahead. Last month, the U.S. and China agreed on a trade framework to ease tensions, but many details remain vague. Investors are now waiting to see if this agreement can withstand a new round of trade brinkmanship. One conclusion is abundantly clear. Dialogue and cooperation are the only correct path. China's latest warning comes after Trump posted his flurry of letters. You know what? People are going to have to get in line or they're going to suffer. And nobody wants that. Trump doesn't want that. He just wants America to be treated fairly, because we've not been treated fairly on the world stage for 40 to 50 years. From Bloomberg, Trump Media and Technology Group is plowing deeper into the cryptocurrency space with a new filing for an exchange-traded fund that would hold a number of digital assets, including Bitcoin, Ether, Solana, and others. Now, Trump promised that he was going to make America the crypto economic superpower in the world. He's well on his way to accomplishing it. Promises made, promises kept. From Reuters, Meta Platforms is racing to secure top artificial intelligence talent for its newly created superintelligence labs to better compete with rivals including OpenAI, Google, and Anthropic. Basically, what they're doing is, because they have a big checkbook, they're poaching talent from the other companies I just mentioned. The Facebook and Instagram parents' aggressive hiring for its unified AI initiative has intensified the talent war in Silicon Valley. Oh, Zuck. We can't put anything past you, can we? From Reuters, Americans' outlook on inflation was little changed last month as households upgraded their views on the state of their finances and ability to get credit, according to a report released today by the New York Federal Reserve. As of June, inflation 1 year from now is expected to be 3%, down from the expected 3.2% in May, while the outlooks at the 3- and 5-year horizons were unchanged at 3% and 2.6%, respectively. Looks like the Fed just might be getting ready to take some action. Amid the calm outlook for future price increases, the survey found that respondents had markedly upgraded their assessment of their personal financial situation relative to last year, while noting credit had grown easier to access. Respondents also upgraded their expectations about the state of their financial situations a year from now. Yeah, it's called the Golden Age. But oil, that's another story. Oil is fluctuating as traders weighed President Trump's latest wave of tariff letters against fresh tensions in the Middle East. Remember, for the oil companies to be profitable, got to be over $70 a barrel. And last from Wall Street and Bloomberg, Uber Technologies. Their investors are brushing aside potential threats from self-driving competition to bet that the company has plenty of room to expand in the near term. Uber shares have rallied more than 60% to a record this year as partnerships with robotaxi startups like Alphabet's Waymo and growth in new markets have given bulls reasons to cheer after the stock underperformed in 2024. The advance has made Uber the 7th best S&P 500 performer in 2025. So that covers the Wall Street news. I guess now we can go to the local news. As you all know, Logic 247 is on hiatus. A week ago Sunday, we published our 20,000th alert over 361 weeks. And what we averaged on a weekly basis was 20% or less of the alerts being stopped out based on simple market structure and a very simple process that we teach all of our passport holders. So, with Logic 247 on hiatus, the bigger focus now is on the concierge trade alerts. Now again, Logic 247, 20,000 alerts over 361 weeks. But long before there was a Logic 247, we had the concierge trade alerts, or CTAs. The Logic alerts used to come out around the clock, 2 a.m. or 2 p.m. Futures trade around the clock, and we have traders around the globe. So our day session is their night session and vice versa. But the CTAs differ in that they don't come out around the clock. They're typically posted 5 minutes ahead of the Globex Open each evening. So we're in the Tuesday session today, but the Tuesday session began last night at 6 p.m. Eastern. So all of our traders and all of our trial members had all of these targets 5 minutes before the market opened. Silver, gold, the NQ, crude oil, the Russell, the Dow, and the S&P 500. Now, when we go through the individual markets and you see these targets on the charts, don't forget, all of our traders had the targets 5 minutes before the market opened. So with that, we can actually go to the charts now. And we'll start where we always do, with the S&P 500, Emini futures, the bellwether. All right. The black step line has crossed blue and climbing. But we're up against resistance. Once that step line crosses, and we closed below it yesterday, now the 50% fib extension and the black step line are acting as resistance. I wouldn't be surprised to see us either close pretty much where we are right now or lower, and by Friday, I expect we'll be back to the BBC. We have to overcome this support level right here, the 38% fib extension. And then once we hit the BBC, it becomes a question of, will the pullback hold or not? Price always reverts to the mean. In our case, the mean is green. We call it the BBC. Simply stands for bull bear cross. When price crosses below the green line, as it did back on February 21st, we're bearish and expect lower prices. And when price crosses back above the green line, as it did on April 24th, we're bullish and expect higher prices. Lower prices, higher prices. Now, I said price always reverts to the mean. In other words, you get a leg and a retracement, a leg and a retracement, a leg and a retracement. And you'll notice that the pullback holds more often than it doesn't. Once we got back above the BBC on April 24th, the first pullback held, the second pullback held, the third pullback held, the fourth pullback held, and now I think we're getting ready to revisit it. Price always reverts to the mean. Again, I think we'll see it by Friday. The high impact economic news that comes out Thursday may have some effect. And the Fed minutes that come out tomorrow afternoon at 2 p.m. Eastern may also have some effect. Those are fundamentals, and we are technical traders. Now, the 30-minute charts are where all the alerts are made. The logic alerts, the concierge trade alerts. The vertical line separates today, Tuesday, from Monday. Back here's Friday, back here's Thursday. The horizontal lines are the weekly trading zones. We've published the zones for our traders every week for the last 15.5 years. When price drops to a weekly trading zone, we expect support until proven otherwise. When price rallies up to a weekly trading zone, we expect resistance until proven otherwise. Now, these are our windows. And now, the zones are published Monday morning at 6:15 a.m. Eastern. Once they're published, they're carved in stone for the entire week. They don't change in any way whatsoever. So we had a 2-point window of opportunity that filled right here. This was the open last night. We dropped, this was the open. We dropped right to the CTA short target. So in the first 30 minutes, you could have had your goal for the day. 62.62 down to 62.57. 5 points right there. You only need 2 points to get your goal for the day. When the market finds support, it's going to go look for resistance, which it found at the BBC, consolidated for an hour and a half, 2 hours. Then we got a leg and a retracement. A leg and a retracement. Notice the pullback held, the pullback held, even this pullback held. But we did fill this window of opportunity beautifully. Now, these windows were published last night shortly after the open. They're in the Telegram discussion group, the one that's private for our traders and the public one for those on the trial. They've all got a timestamp, so you know exactly when the windows were drawn and published. So this 2 points, goal for the day. Resistance at the zone sent us back to the BBC, which sent us back to the bottom of the window. Resistance will always send the market looking for support, and it found support right here, which is right here. It's called market structure. Support will always send the market looking for resistance, which it found at the weekly trading zone. We're above the BBC. We know where the resistance is. It's held the entire session. So now I'm waiting to see price get back below the BBC on the 30-minute chart. Now you've got potential support at the BBC, at the black step line, and at red and falling. So we need to take out this low, and then our next support will be right here at 62.67. I don't think we're going any higher today. I could be wrong. It's happened before. In fact, if we hit the short target and take out this low, then we will most likely fill this 3-point window of opportunity, again, that was published last night, shortly after the Globex open. If price were to somehow find the strength to rally, you got a 2-point window of opportunity here, but there you have a bearish cross. It's where the red line gets below the green line. So be very careful. If you take this long trade, if price should get up there, I don't think it will, but it could. You got to embrace all possibilities. Now let me jump back to the daily for just a second. The reason the daily chart is important is institutional traders, the ones with the really deep pockets, they're the ones that move price. I'm talking about the traders over at Goldman Sachs, BlackRock, State Street, those guys. I encourage you, whatever you're trading, futures, stocks, crypto, Forex, ETFs, spend 2 minutes with the daily chart before you drop down to your smaller time frame and actually start trading. Number one, it gives you a look over the shoulder of the deep pockets, a free look. You can see if they're buying, if they're selling, but more importantly, you're able to identify, as we have done. We've got resistance at the black step line and the 50% fib extension. That's why I don't think we're going to see price go higher today. It's been a quiet day. It's an inside day. An inside day simply means we've not taken out yesterday's high or yesterday's low yet. But the institutional buyers, they won't keep throwing good money after bad. If they can't move this market higher, they're going to start pulling their offers. It takes financial commitment for price to rise, but all it takes for price to fall is for the institutional traders to hit pause on the buy side. And this thing will drop like a rock when that happens, if it happens. Now here's the Dow, and this really kind of explains the whole market today. Just flat and sideways for the most part. This window of opportunity never triggered. This window of opportunity never triggered. This was the open last night. Red and falling, which is bearish, turned to blue and climbing, which is bullish. Sent us up to the BBC, where we consolidated for hours. And then we dropped to the weekly trading zone and found support. Support sent us to resistance at the BBC, back to support at the zone, back to resistance at the BBC, and then this low that you see right here, what's that all about? You see where red turned to blue? That's it, right there. And now it's just a little back and forth, sideways, because we had no economic reports come out today to drive price. The Russell. Last night, we dropped lower on the open, but when red and falling gets directly below price, it often becomes support because it's on its way to becoming blue and climbing, which is bullish. So we traveled up to the BBC, consolidated for a few hours, got right up to the bottom of that 3-point window, resistance, which sent us back to the BBC support. And then here we beautifully fill the window, hit the long target, retraced, bounced, see the pullback here at the BBC held. That sent us up to fill that 3-point window again. We've now overcome this zone. First two 30-minute candles. In fact, you see the bearish cross right here? That's when the red line gets below the green line. When you have a bearish cross that leads to an extended move, the first time price revisits that area will almost always be good resistance. And it was. But on the second time up, we almost overcame it. And the fourth attempt, we actually made it up to the high of this body right here. And now we pulled all the way back to the zone. And remember, when price drops to a zone, we expect support. So we caught a bounce. Now this structure here is perfect for a rally. Black step line, blue and climbing, BBC, the way they're positioned. Price should be able to make it up to the next zone overhead. We've caught a bounce, but we got to take out this high. If we take out this high, then you would have a good trade from 22.56 up to 22.59. $22.56, $22.59, 3 points. But again, before that can happen, the price is a little bit trapped. You got resistance here off the previous 30-minute candle, which is based off this. But you got support at the zone and the black step line. We trade through the step line, then we've got potential support at blue and climbing, and then potential support at the BBC. I think what we're going to see from here for the rest of the day is just some sideways movement. Unless President Trump puts out a post that moves the markets. Because we had no important econ news this morning. The NQ. Here's where we opened last night. Red and falling, got below price, serving as support. Turning into blue and climbing, which is bullish. Pushed us right up through that 20-point window. Now that 20-point window on the NQ The NQ pays $20 a point. So that little window of opportunity was worth $400 per contract traded. And then we did a retracement, and we did it again. And we hit the bottom of this window, resistance, which sent us back to the zone, support, which sent us up to fill the window here for 14 points. That's $280 per contract traded. Then it'll pull back to the BBC, and then another run, filling the window. And then we had another run here where we fill the window. Actually, we filled it quite a few times. These are green candles, but they hit the top of the window and pulled back and pulled back and pulled back. And then we actually hit the long target. Now we're running into resistance. There's potential support at the zone, black step, the BBC, the black step line, and red and falling is directly below price. So if red and falling turns to blue and climbing, we might move higher. There's a possibility, and then that would give us a 13-point window to fill. Crude oil. Here's where we opened last night. This was the opening candle. Down we go to the zone. We actually hit the top of the window, but we did not enter it. Support bounced us up. Resistance came in right here. That sent us back down to the zone, and you see where red and falling turned to blue and climbing. That gave us a little pop. Then back to the zone, support, support. Then we actually got below the zone, and we made it about halfway through that window. Now 10 ticks is $100 per contract traded. So you had about 5 ticks in that. Then we got a leg, a retracement. The pullback held at the BBC. Then we hit resistance at the zone, which sent us back to support at the zone. And then back up to the zone. We finally overcame the zone, and we filled the 10-tick window. We hit the CTA long target, and crude is still climbing. And I think crude, the highest weekly zone this week is 69.80, currently trading 68.67. Every $1 movement in crude is worth $1,000 per contract traded. When gold moves $1, that's worth $100 per contract traded. When silver moves $1, that's worth $5,000 per contract traded. So crude still has room to move. Gold, this was the opening candle last night. Bang, we hit the target. And we filled the window. Then we came back to the BBC, found support at the zone, caught a little bounce, but you can see the weakness. And we get below the zone. At this 2-point window, that's worth $200 per contract traded. Market found support at the bottom of the window. It's this area right here. See this little crevice? You've got a wick sticking up and a wick sticking down. It's a great place for the market to find support, and it did. Support sends the market to resistance at the BBC, and then we get a drop, and we come down. We fill this 1-point target, which is worth $100 per contract traded. And the market found support here. See this bullish cross? Now this is Tuesday, Monday, Friday, Thursday, Wednesday, Tuesday, Monday of last week. We had a bullish cross. And when price got there, remember, when you have a bullish cross, blue line gets above the green line, it leads to an extended move. The first time price revisits that area will almost always be good support. And it was. Now, if you're new, you're probably wondering, does that happen every time? Well, very few things happen every time in the markets. But does it happen a whole lot more often than it doesn't? That would be a yes. As you can see, the step line is starting to hook right. If it crosses to the right side of red and falling, we should see price move up to the zone. If we can get through the zone, then we should find resistance at the BVC. See the pullback held, and if we get another move up, I suspect that pullback will hold as well. Now our last market, silver. Here's where we opened last night, ran into resistance at the zone. Resistance sent us to support at the BVC, which sent us back to the zone, resistance, back to support, back to resistance at the long target. Now that long target is based off the bearish cross from yesterday. So, like I said, it happens more often than it doesn't. So we get a leg and a retracement, resistance at the zone, pullback held. That sent us down to the short target, support, which was based off this bullish cross. That sent us up to the BVC, pullback held, sent us back down to the short target. We bounced up into red and falling, resistance, and that sent us down to the zone, support. And we finally broke through the zone, and at 7-cent window, on the first attempt, we probably got about a nickel out of it. It only takes 2 pennies to get your goal for the day. Then we bounced, and on the second attempt, we filled it completely, and then some. That's $350 per contract traded. Now look at the step line. It's hooking right. If that black step line, see on the way down, it's on the left side of red and falling. If it gets on the right side of red and falling, as it's trying to do right now as we speak, we should see price retrace back to the BVC. This pullback held, this pullback held, this pullback held, this pullback held. Will the next one hold? We'll have to wait and see. So that covers each and every one of the individual markets. Here's one last look at the daily. And things haven't changed much since the beginning of the broadcast. We're up against resistance times 2. And if we were to get through that, then blue and climbing, because it's directly above price now, that's also resistance. And if we break through the all-time historic highs, we've got potential resistance at the 62% fib extension, and then the 100% fib extension. Michael should be here in just a second. To become a member, go to mytradingiq.com. At the top of the page, there's a purple button. Michael's going to walk you through this in a few minutes. Just click that purple button, fill out the registration form. Well, that's if you want to take the trial. If you want to become a member, send an email to support@cfrn.net. In the email, say, I want to become a member. If you're a veteran, say, I'm a veteran and I want to become a member. If you are a veteran, we want to thank you for your service and provide you with a nice little discount. Valerie is going to send you an email in response to your email that explains what it means to become a member. She'll also provide a link for you to click so you can seal the deal. 9 out of 10 new traders fail simply because they don't have a teacher. Now, if you Google learn how to trade, you'll find 10,000 trading rooms out there full of grumpy gurus and a lot of stuff that just doesn't seem to work. When Futures Magazine published that article back in 2006, they gave all the data, all the statistics, but they did not explain why 9 out of 10 traders fail. So I had an inquiring mind, and it didn't take me long to figure out it was because they had no one to teach them. See, buying an indicator pack, watching videos, you can watch videos of Mark Spitz swimming every day for a year. But that's not going to teach you how to swim. It will prove to you that swimming is possible. You need somebody to teach you. Whether you want to be a doctor, a rocket scientist, a lawyer, or a barista. Somebody's got to show you how to do the job. So that was a gaping hole in the financial services industry. And we've plugged it. 2 hours of live interactive training every trading day. Real trades in real time with real money. Michael explains every move he makes, every trade he takes, and you see the results right before your eyes. Along with 2 hours of interactive training every trading day, you also get private one-on-one mentoring at your request. The strategy you learn, the indicators you own as a passport holder, are fluid across all markets and all time frames. Futures, stocks, crypto, Forex, ETFs, doesn't matter. As a passport holder, you'll get the concierge trade alerts the second they're published every evening. You'll get the weekly trading zones every Monday morning at 6:15 a.m. Eastern. And every Thursday afternoon, you will get an invitation to attend the members-only workshop every Thursday night at 8 p.m. Eastern. It truly is everything a trader needs, all under one roof, one low price. Michael's here, so he's going to take over, give us a recap of what happened in the live training room this morning, do a little live trading on the TradingView platform. Then I'll come back and I'll wrap things up with our good word for the day.
Okay. All right. Here we go.
Okay. Let me get you centered and come on. There we go. All right.
All right. Here we go.
Rock and roll.
All right. Good afternoon, everyone. Today is Tuesday, the 8th day of July, 2025. Now, if you have not taken a free trial with us, go ahead to mytradingIQ.com. Click on this purple button right here. There is no credit card required for the trial. Click on that purple button and you will be sent to this registration page. Now, on this page, all that we ask for is your name, your email, and your phone number. Down at the bottom, down here, give us your TradingView login ID. All right. If you don't have one, click on this platform. Click on this link right here. It's going to bring you to a little video right here. In that video, just follow the instructions, and at the bottom of it, you'll have a link right here. You can click on that. It's going to take you to the place where you sign up for TradingView. When you do that, make sure that you give us that you sign up for the essential anyway. And once you do that, you'll have a TradingView login ID or TradingView user ID. Make sure you give that to us so we can activate your indicators and get them indicating on your charts for you. Okay. Okay. Results. We had a pretty good day today, and it took a while to get the goal again today. It took longer than yesterday, but we got it, and we kept going after that. So it was a pretty good day. Our best day of the month so far, actually. We ended up plus 152 on the NQ, plus 21 on the Russell, plus 33 on gold, and plus 6 on the ES. Yeah, so $1,270 a contract. Today it took 24 minutes and 11 trades to get to $1,200, and took a total of 34 trades. So on the month now, we're at $4,222 over 5 business days, averaging $844 per contract for 2 hour business day. On the year now, we're at $159,687 over 114 business days, averaging $1,400 per contract. Even number, $1,400 per contract per 2 hour business day. Now, if blueprint, if you were to quit trading when you get the goal for the day and add 1 contract per month, so far this year, you would have only had to work 14.35 hours. And you would have you would have earned $68,327 if you did everything just like me. You'd be in your 7th contract right now, and we have $68,327, averaging $4,761 per hour. Okay, that's where we stand now. All right, so the trades, almost all the trades were on the NQ today. More than half of the trades were on the NQ today. So let's just get into it right here with this. On the gold, our first trade in here, we picked up one gold tick right there. Then on the next one, we picked up 2 more, and that got us to +3. Then on the one after that, we had a break even. Then we picked up 2 more that got us to +5. Another break even, and then finally, I think we got some traction on that one. Yeah, we picked up 14 that got us to +19. Then we had 7 that got us to 26. Then I'm sorry, it wasn't 7 to 26, it was 9 to 28. And then 5 to 33. And that is how we ended it with the gold on the morning session. Looking for opportunities in here. There was one there. Not one there. One there. I'm just looking down here when it comes out of the oversold. If you're above the YBR and it's coming off the midpoint. Okay, so there wasn't one there. There was one there. That wouldn't have worked out. You wouldn't have done anything else until all the way over here. If you did that, because everything was all over the place in there. It would have worked out if you would have done it. Then the next one, the follow-up one, was still part of the same trade. Next one here was right there. Then you're still above the YBR, but you wouldn't have had a trade there. You wouldn't have done anything. All the way over here, that would have been okay. And then it finally flipped down. You would have had one nice trade right there. And it flipped back up, and then it flipped back down. And here where it flipped back down, you would have had an opportunity right in here that would have eventually worked out. Another one here that would have been okay. And then over here, it flipped back up. You wouldn't have had anything right there. And that was it on the gold. We ended up with +33 on gold this morning. Okay. And the Russell, we actually ended up positive on the Russell. We started out negative, but we did end up positive. Why is the Russell background color so different? I don't know. But we started out here with -15 on the Russell right there. Okay. And then we got 10 of it back to get us to -5. And 5 more back to get us to 0. And then 20 ticks. 20 ticks right there to get us to +20. And 1 tick here to get us to +21. And that's where we ended up with that today. All right. Moving all the way through here. I'm just looking for opportunities because we got way away from the midpoint in here. And then it finally pulled back to it here after it came out of the oversold. You see when it's a long time out of the oversold right here, that is gonna, if you have the lower retracement on, that's gonna make a really long red line here. All right, that doesn't change until it comes back out of the oversold. All right, it's when it comes out of the oversold that it changes that. When it comes out of the overbought, it changes the top. You see right here, it came out of the overbought and changed top. Right here, came out of the overbought and changed the top. That's what determines the range that you're trading in. Okay. Let me put the question box up. No questions. No questions for me. Okay. And that was it. That's all we did. So during the break, if you look here, anytime it's above, and you come out of the overbought, or below and you come out of the above and you come out of the oversold, below and you come out of the overbought, like that right there was a good trade. Right in here, I wouldn't have done that on the pullback. I wouldn't have done anything through there. All the way over here, I wouldn't have done anything. Finally, right here, I would have taken a trade right there. And I wouldn't have done anything in here because nothing was coming off the midpoint. Okay, so you understand the whole idea of having this midpoint is to reduce the number of overall trades. You know, in the past, people have always said, you know, why did you take that last trade? Why did you take that trade? Why did you take this trade? Well, here is why. I'm looking for the opportune, the most likely place for price to move in the direction that you want it to move. Right? I'm always looking for that. And so now we're below the YBR again right here. Right? You wouldn't have done anything with this one because it was too far away from the midpoint. You wouldn't have done anything with that one because the last one didn't make it to the oversold. So this would have been the first one right there. That would have been a good profit, profit eventually. And right in here, I probably wouldn't have done that. It would have eventually gotten you a break-even trade, but I probably wouldn't have done it because it was far away from the midpoint. Then you flip the YBR over, and the first opportunity you really have is right here, but I wouldn't have done that either because it's too far away from the midpoint. It would have turned out to a profitable trade if you'd have taken it, but that was the Russell. Right, and now, what time is it? Okay, and now, let's see. On the ES, we took this one right here for 2 ticks and this one right here for 4 ticks. I got us our 6 ticks on the ES. Now, after that, it's not that there weren't trades. There weren't very many, but they just weren't. Okay, so here we are all the way to the break, and there really weren't any trades. During the break, when you're above the YBR, you're looking for the commodity oversold. The first one was right there. That wouldn't have worked out. The next one was right here. That wouldn't have been a trade. You get back down below it. Right there would have been okay. And it got back down above it, above the YBR, got down below it. So you've been looking for long trades in here. That would have been your first one right there, and that would have stopped out. Right, then you wouldn't have done another one until this short trade right in here. That would have been your first one. And that would have been okay. Almost brings us to a trade right now if that were in the overbought. Right, but on the ES, we ended up with 6 ticks after just 2 trades. Now, the NQ. The NQ is where we had the majority of our trades today. So on the 19 range, it moved around a lot. We did stop out once or twice anyway. All right here on the NQ, we picked up 4 ticks on that trade, and 4 more to get us to 8 there, and a break even, a break even, a break even. Then 4 more to get us to 12. Then we finally got 12 more to get us to 24. Break even, then 12 more again to get us to 36. Then 24 to get us to 60. Then 12 more to get us to 72. Then 45 to get us to 117. Oops, sorry about that. Did you guys notice that? If you hover over a bar, just left mouse click and hold it. It'll give you the open, high, low, close of that actual bar. Anyway, the next trade that we had a couple of break evens in there. Then we had a +4 to get us to 121. Then we had a +45. In here somewhere we had a +4 that I didn't write down to get us to 121. Then we had a +45 right there to get us to 166. And then we stopped out and brought us down to 131. Had a break even from 131 up to 132. And 132 up to 136. And then 136 up to 152. And that is where we ended it this morning. All right. During the break, it looks like above the YBR right here, it looks like anytime it came out of the oversold, if it was coming off the midpoint, if it closed at the midpoint, aggressive long right there, you would wait for this one. That one there would have been a trade that would have stopped you out. Right there, if you took that long trade right there, would have stopped you out. The next one was right in here. You might have taken that. If you took that, that would have stopped you out too. All right, then the next one would have been over here. We would have gotten it back. In here, I would have taken that and pulled back too deep. And it was a long time above the YBR right here during the break. Right here, that would have been a decent trade. Nice 45 tick trade there. That would have been a decent trade. This would have been a good trade. And all the way over to here, that wouldn't have been anything. And in here, that would have been a gap up right there. So it depends what you did with the gap. Then it flipped everything over. You would have had a short right there. Would have been okay. Your next short would have been right here. That would have been a stop out to the tick, it looks like. Well, there are a few more trades in here. If we keep going, we're above the YBR right here. You wouldn't have done anything with all of this right through here. Okay, maybe right here. One trade right there. And nothing else until that would have been a trade. You would have been waiting for it to come back. I wouldn't have done anything with that. And below the YBR here, so you could have had a short right there for a little bit. A short right there for a little bit. Nothing, 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 nothing. Then all the way over to here. Nothing really you could do there. And it's setting up along right now, just about. All right, so what you'd be looking for right now, you're in the oversold. Let's see if I bring this up, you'll see that it just crossed over into the oversold right there. You're in the oversold. What you want it to do is hit the midpoint and give you an up close off the midpoint. Okay? So that was a lot of trades on the NQ. So for anyone that's just coming in now, if you haven't taken a free trial, go to mytradingIQ.com, click on the purple button, no credit card required for the trial, fill out this form, that's where it brings you, and sign up for the trial. All right, gives you your login ID. On the morning session, we ended up $1,270. Okay, and right now we haven't taken the trade yet in this session, but we're about to start looking for right now. Okay. All right. So here we are looking for trades right now. All right. So we're oversold right here, and we're at the midpoint. So we want an up close here that's going to take it out of the midpoint. I mean, out of the oversold. That's what we're looking for on the NQ. All right. So what you do is you find out where the bottom of the bar is. The bottom of this bar is showing 725. You add 5 points to that. All right. Now this isn't going to be a trade because it's pulled back too deep. All right. It's going to flip the YBR. It just did. So now you may actually get a short. You may actually, we were looking for a long trade, but you may actually get a short trade out of this right now. May actually get a short trade out of this now. And up close on this is going to put it right up here at the midpoint. That would be a trade I'd be interested in. Okay, right there. I'm going to short it right here. That is an aggressive short trade right there. Now, after it goes 10 ticks into profits, go 2.5 points down. So it's going to be down to right here. And then I'll bump the stop to break even. Okay, let's get a 25 tick stop on it. And it's going to go 10 ticks into profit, right down to 4.5 here. Okay. And then I'll throw the stop to break even. Just about there. Just about there. There it is. Stop to break even. All right, now I'm going to lock in 4 ticks on this. So we have some profit in the trade, and we're out with 4 ticks. Now with 10 contracts on, that's $200 right there. Right. What it should do is go down to the prior swing low. It should go through the prior swing low. It should do another leg length like this one right here. This is what it should do right now. Okay, I'll draw it for you. Like that. That's what it should do right now. All right, but just down to the swing low right here is the first target. That's a good first target for you. Right, so that was a great entry. We took 4 ticks in profit, but if you stayed in it, you had a chance to take a lot more than 4. All right. That was really the only trade we had in there. All right. It was pretty easy to see coming together, right? You guys saw the whole thing, right? It's actually pulling back and almost giving you another trade right now. It's dragged the midpoint down a little bit because now you're looking between here and here is what you're looking at. Now you can use swing high. You do swing high is right here. So swing high to swing low, that's the midpoint right there. Okay, this is what you're looking at for your midpoint. It's right exactly that spot. Okay. So right there, you could short again right there if you wanted to. It's really close to the swing low, so it's got a little added risk to it because it's so close to the swing low, but it hasn't finished this leg length down to here yet either. Okay, where it came out of the overbought right here. That's where it would give you the potential short trade. It should make it down to here right now. Okay. Here, it hasn't gone 10 ticks in a profit yet. It's almost there. There it is. It just hit 10 ticks in a profit. Okay, now I'm going to lock in minute 975. I'm going to go all the way down here. That's 6 points right there. Right, and this is where it should go down to 86.50. And my target down there with 45 ticks is at 89.50, right? Just took me out with 24 ticks right there. My target down there at 45 ticks, be 89.50, but it should go down to 86.50. It would have just hit my 45 tick target, and it just hit this level right here, right? So this has done everything that it should do. Now when it pulls back again, you may get a deeper pullback here. May not. We'll see. But that's 2 profitable trades there on the NQ so far. Okay. This stuff is not that complicated. Okay, this ended up being no trade right here. You guys seeing all this? Do you understand it all? So far in this session, we have 49 ticks on the NQ. It's 1 contract, $245, 2 trades. That's with 1 contract in this session. All right. Well, it is 1:18. We have about 12 minutes left in here. 12 minutes left in this session. This brought the midpoint down when it came out of the overbought right there. It's not actually a midpoint to bounce off of there. The ES is just about going to trade here. The Russell's almost going to trade. You can almost argue the gold has one too. Almost. All right, we just got all the way up here to the overbought. Now, 70, 72. We got a trade here potentially on the Russell and on the ES. We need to down close on both of them. Okay, and you'll have a trade on each one of those. Nothing over here on the NQ, but both of those are setting up trades. The ES and the Russell. Okay, here's the Russell. Here's the Russell. Here's the ES. Okay. Here's the ES. Stop going to break even on the ES. The Russell hasn't gone enough yet to get stopped to break even. That's going to go 2 more ticks. Get down to 0.3 on the Russell. I don't think it's gotten there yet, has it? No, it's got a 0.4. We're out break even on the ES. Okay, and this has gotten to 0.4, not 0.3. So not quite a trade there. I mean, no break even there yet. No break even. It is an actual trade, but hasn't gone break even yet. Right, should be coming right up here. Should be coming right up here on the Russell. We do window on top on this. There, just one more. Oh, so close. This is discipline. Put that always on top. Okay. Couple more. One more. There it is. Now stop and go to break even. All right, I'm going to lock in just 1 tick on the Russell so we don't end up with another break even. I had 2 profitable trades over here, 1 break even here, and now 1 profitable trade so far on the Russell. Just one tick. It should go all the way down to 44.1. It should go through our target down here. That's 25 tick target right there. Should go through that. Okay, I'm going to lock in 10 now on this. And I was going to go for 15 right there. 15 on this. Okay, it should make it down to 44.1 right here. So we should get our 25 tick target. Okay, it should hit that. Patience. I want to lock in 20, but I'm going to let it go. It should give us the whole thing right here. It should get down to the swing low right now. Nope, 15. Okay, well, that's still another good trade. The gold didn't actually make it into the oversold right there. All right, so he didn't end up with the trade on the gold. So this was a break even. That one there was a break even. And this one over here was profitable. All right, so far in this session, we've had 3 profitable trades and 1 break even trade. What are my settings? The ATM. You mean what's my bracket part? All that stuff is spelled out here. If you go to mytradingiq.com, click on trade rules. It's right here. For an range, I know I have, this says 30 ticks in profit, but the DOM is set up for 25. But on a 9 range, it goes to break even after 5 ticks in profit. Okay, that's the Russell. Now the NQ, we're using a 19 range, has a 25 tick stop, goes to break even after 10 ticks in profit, 45 tick target. That is set up properly. The 7 range on the ES has a 10 tick stop, goes to break even after 4 ticks in profit, 30 tick target. Okay. All right. So the pullbacks are too deep to want to do anything right now. The gold had a decent trade. No, I'm sorry, it didn't come out of the oversold. If it would have come out of the oversold, this would have been a good spot for it right there. I probably would have gotten a break even had I done it. But oops, I was talking about that whole time. Bart, did you hear me when I talked about the stuff over here? Was my mic on when I took you over here and I said all this stuff right here? Was my mic on when I said all that? Because I just realized my mic was off. Anyway, what I was just saying here is the gold and the NQ were the only ones that were close to giving us a trade, but the NQ didn't because it came out of the oversold right here. That brought the bottom back up to it. Right here, brought the midpoint up to the bottom, which kind of throws it off a little bit. Okay. And I was saying that the ES is going to flip the YBR when this bar closes. It's going to flip it. The Russell just flipped it, and so we need this to get into the oversold. Just flipped it there. We need this to get into the oversold. We're already above it here. That to go up and come back down and hit our midpoint. And the gold needs to come back down and hit the midpoint. It still hasn't gotten into the oversold. See, it didn't get in it here, and it didn't get in it there. Either one of those. Okay. And it is now 127. So Bart, I'll say it again. If you have not gone here to see this stuff, it's out here on trade rules. MyTradingQ.com, click on trade rules. Right. The 7 range is a 10 tick stop, goes to break even up to 4 ticks in profit. The 9 range is the one that I have actually a 25 tick target on it in the bracket that I'm using on the DOM, but it says 30 tick target here. In the 19 range, those are the 3 time frames that I'm using. Those 3 right there. Okay. And this is going to wrap it up for us, probably. We could have a trade here on the gold. If we get a down close on this bar, it'll be at the perfect spot for an aggressive trade if it happened when you're going into the oversold, but it's not. Okay, so because it came out of the oversold right there, I'd wait for a little bit of a pullback in this bar that would put your stop down here. You can still go long on that gold. Just wait, there it is right there, a little bit of a pullback. And I just went long on that. There it is, I'm going to throw my stop to break even on that. I'm going to lock in 2 ticks. And I'm out with 2 on that. Right, so that was the whole thing right there really quickly.
2 ticks is not chump change with 10 contracts.
It's not. It's $200. $200, and that's our 5th trade times. Yeah, I guess we'll wrap it up with that one. Right, we had 1 profitable trade there, just a little bit. 1 profitable trade here with 15 ticks. 1 break even here. 1 plus 4 and 1 plus 24 on the MQs. So we had a pretty active session right here in this half an hour. And if you like what you see, take the free trial. Go here to mytradingq.com. On the purple button. There is no credit card required for the trial. Just click on that purple button. It's going to bring you to the registration page. Just fill it out. Right, make sure you have a security login ID down here at the bottom so we get your indicators indicating for you. Now with that, I'm sure Dwayne has already told you, you get 5 days in the room from 9:30 to 11:30 in the morning. Okay, and you also get a chance at one-on-one training if you want it. Right?
And you get access to everything we offer, with the exception of the members-only workshop on Thursday night.
That is a true statement. All that stuff for free.
All that jazz.
Yeah. All right. Well, I can pass it back to you at this point. The fabulous Phoenix, Arizona, in Studio A, overlooking South Mountain. It's the largest city park. If you are ready.
I'm ready.
Excellent.
Okie doke. Recap of the morning session.
Today it took 24 minutes and 11 trades to get to $1,200 with 10 contracts on.
Good job.
That took a while today.
Way to hang in there.
Thank you. Thank you.
Okay, guys, we went through every one of the markets in a granular fashion. So if you showed up late, you can, as soon as I end this broadcast, you can go to youtube.com/CFRN and you can watch the entire broadcast in its entirety. In fact, there's over 2,800 daily episodes archived on our YouTube channel. youtube.com/CFRN. Christian Financial Radio Network since 2005. Celebrating our 20th anniversary. And with that, we're going to wrap things up with our good word for today. Walking by faith. John 8:12. I am the light of the world. He who follows me shall not walk in darkness, but have the light of life. Many of us are waiting for the green light we have already been given. Jesus said, I'm the light of the world. He who follows me shall not walk in darkness, but have the light of life. When do insight, illumination, and direction come? When you take the first steps of faith. We're not advocating a thoughtless or prayerless approach to decision making. You need to know that God is calling you. But you can be so afraid of doing the wrong thing that you never do the right thing. It's wise to think and rethink, but not overthink. Overanalysis results in spiritual paralysis. And that has its parallel in the world of trading. Okay? Pastor explains, if you try to logically figure out the will of God, you'll never take a step of faith. Why? Because the will of God is not logical. It's theological. The word theos means God. So theological denotes adding God into the equation. The pastor continues, that's why it doesn't always add up on our human calculators. The promptings of the Holy Spirit won't always make sense to your logical left brain. However, we need to recognize that God's thoughts are higher than our thoughts. Isaiah 55:8. And trusting the Holy Spirit is more important than leaning on our own understanding. Proverbs 3:5. The disciples Jesus called did two things. They worked miracles and they made mistakes. Had they been unwilling to make a mistake, they would have never experienced the joy of working a miracle. So, when the light is green, go and walk by faith, not by sight. That's a good word for today. Thanks so much for tuning in. Whoever you are, wherever you are, may God continue to richly bless you with His mercy and with His grace. And I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading E-mini futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.